How to trade an increasing bull sentiment leading to a reversal. So as we're getting towards the opposite end of the trade view window, we're looking at the market now being overbought. Okay, so the market pushing up higher, looking for points of imminent reversal, and then the market's come back to fair value. So very much like everything else we trade, we have to be careful of picking tops. Okay, so the market wants to push higher. We can see that as it's moved through the strong breakout chance to low directional bias. We're now in the increasing bull sentiment, and there will be a reversal at some point, because there always is. That's how markets work. But remember, we've got that final bit of bullish momentum in the markets, so we can either use this to buy some short-term breaks, or again be quite patient and wait for the market to exhaust itself, to be particularly overbought before we then get that very strong imminent bear reversal and then sell the market. So we'll just go through a quick example now, the dollar versus the Chinese renminbi. So we've already got the charts open, so we can just normally double click. What I've got is the hourly, the normal double-click chart. I've just overlaid again the RSI, just again graphically to show how the markets are moving. You've already got this information in the TradeView window, so we can see the market now in the hourlies is pushing through the 100% and the 161 extensions. We're just right now trading at 6.0287, which is the short-term reversal point. Below that, well, we don't have any real major point of attraction until for another 193 ticks. So is the market in this candle going to move that far? Probably not. So what we're trying to do is pick out a logical point of where to go short within the market, and to pick out a good selling opportunity. As I say, as the bull sentiment is increasing, you can use this short-term volatility as a short-term buy. Very much remember, we've moved through the breakout chance, so there will be a sentiment within the market continuing of these bullish moves. But again, I'm using probability, I'm using the likelihood of what's going to happen, and my I-view bias sentiment tells me that we're going to run out of that bull sentiment soon, and the bears are going to come back into the market. Again, you can see from the hours, these were the charts set up this way. Found support on the moving average. The market then has continually tested the Bollinger Bands, closed without them, broke, make higher highs. So if we look at the 15-minute chart, we can see the market's gap down. We've now closed that gap, so we've got a bit more of an idea of what could happen on the smaller time frame. So as we said, quite a long way to go on the hourly chart. But on the 15-minute charts, we've got 15 and a half, 20 ticks before we start hitting resistance on the smaller time frames. So if you are looking for that bullish momentum to phase out, well, that's going to happen probably sometime in the next 20 ticks. Again, so try and plot that on your hourlies. Then you expect the market to come back down, and then retrace, close back within the hourly Bollinger Bands, and get back down to these lower levels of Fibonacci. So again, it's all timing with these things, just because, that's why I've put the sentiment in these different brackets and have these different arrows. That increasing bull sentiment still means you have to be careful. There's no point just selling every top, because the market still will push through that, because we've still got the sentiment of the bulls remaining in the market. When it gets to the highest point, the imminent bear reversal, that's when the market's very, very, overbought, and all the indicators are saying that a reversal has to happen, and that's when you can be a bit more confident, selling into the highs and to the higher points of attraction, because again, bears are looking for these signals to get back in the market. So right now, if we don't make a concerted break, towards these higher levels on the smaller time frame, we could look for the market to get back into the range. Then we just, again, we look for our targets, these Fibonacci extensions to be the pullback points of support, and we can even look on the 15-minute chart. Again, these points of interest run through the charts, and you'd expect that maybe the market will look to test 60148. That looks like a good point where the market can again come back into the range and move down. But remember, because we are in that increasing sentiment stage, a reversal and the next sentiment I-view bias will be an imminent reversal, but we're not quite there yet. So we've still got quite a lot of buyers in the market. We could see a sharp and quick break upwards before the market then comes back to value.